This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look what is interesting on the gold market. Well, today we will take a look at the bit contracted chart because it has really thrilling situation right now on the gold market. In fact, we currently will not need any fib levels or something of that sort, because the current action that stands on the gold market could really have the significant bearish potential, but by many reasons. First of all, let's take a look at the triangle that we have discussed probably a month ago. We have pointed out that depending on the direction of the breakout, we could expect a different situation, and potential upward breakout could lead market to the 1550 area, because that is in fact the lower border of long-term consolidation on the monthly time frame chart. But downward breakout open road not only to the 1180 area, to the previous lows, but could really lead market to even to the 1000 even, something in that area. Because if you'll take a look at the monthly time frame chart, you'll see that this overall triangle consolidation looks like the small pennant on the monthly time frame chart after the significant downward plunge. And if we could treat it as the bearish pennant on the monthly time frame chart, you could imagine how deep market could just fall as the continuation of this pattern. But that's a bit extended view. More close patterns in terms of the time could be butterfly. It's right here. It's left wing, that could be the right wing. Okay, and even more closer pattern is this ABCD. So you can see that the current speed of the legs is very harmonic. So the speed of this CD leg is the same as the AB leg. That is precisely the 618 retracement of that swing. It's very good sign for the ABCD pattern. And what is more significant is that take a look, that market has moved down and break this triangle to the downside, take out of these lows, just plunge down, hit the 618 extension target and holds below it. Sometimes happens that when market has some target extension of the ABCD pattern slightly lower than some extreme, it could gravitate to the target, hit it, and then returns right back. So the object for the market is just the target. So once it has hit it, it just return right back and turn to the upside. The reason taken out of these lows in this case could be the 618 extension, but here we have the different situation, because we do not see, at least currently, a return right back above these lows, return right back above this target. Market just break through it and holds here. That increases the probability that market really will continue move with this ABCD. In this case, the next target will be the daily oversold by the Slater predictor and take a look, 1180 area, the previous lows. That's probably will be the next target if we will take really a short-term perspective. But again, in the long-term perspective, this could really be some kind of the Pandora box for gold market. It's really could lead market significantly lower. Well, currently the major concern is with the possible bounce up, if it will happen at all, of course. The risk is that market will return right back above these lows and will hold above them. In this case, it could be the sign of the failure breakout, and market still could return right back above it. And this is the moment that, in fact, bears do not want to see. That's because this carries significantly risk for them. And that is also the moment that we will watch over. So for a pure bearish setup, we need to maybe retesting of this area, about these lows and these lows, some kind of the retesting, some sort of the retracement, and downward continuation. That's what we would like to see from the bearish perspective. Any bounce higher than these lows, return right back in the triangle, will be a sign of the failure breakout and could change the situation drastically. So now let's shift on the hourly time frame chart. Probably till the end of the week, that will be our major chart to watch for. That is here's the most recent low on the daily time frame, and that is the previous low, 1251. This dot line is this low. High dot line is that low. Just to explain, because on the hourly time frame chart you can't see it clearly. Okay. So what we have currently, around this area, previous low, stands significant fib resistance cluster. That is confluence resistance, 1261, 1264. Around this low, we do not have any resistance cluster, but we probably could get an agreement. 1251 is the fib resistance from the most recent swing down. This really huge plunge down. Guys, here you can see how market behaves when it tested the stops orders. So some stops probably have been placed below this low on the daily time frame chart. As they were hit, market continue move down even lower than 618 extension target. Now, if market will get us the ABCD retracement, we could get the agreement 1251. Since on the daily time frame chart, 618 extension is the minor target. It's not as significant as ABCD completion point. Retracement could be smaller. Although we know that gold market likes to retrace broken lows, but I think that this low around 1251 is more significant than this one, because that is the major low on the daily time frame chart. And I think that we should keep an eye first in this area. So if market will show this lazy pull down, pull up in the same manner as it stands right now, then probably we could watch for this level for potential short entry. Although stop in this case should be extended somewhere above this area, above 1265. So contract your position, because this is really $10 per contract. It's not small stop. But the target of this potential move is also rather promising. So if market will start move down right here to the downside, is really could be significant. If this area is too much for you, then probably you should have to you will have to wait when the downward move will be reestablished, and then trying to catch some small retracement. That will give you a worse entry point, but that will probably let you to place the tightest stop. When the market stands in an area that potentially holds risk for the failure breakout, when market just stands below some broken lows, it always demands some greater stops to be placed, because the invalidation point, the failure of the breakout, will be clear only if market will returns right back above this confluence resistance, will pass above the previous broken highs and returns right back in this big triangle. That's why stops currently should be placed significantly higher than usual. Well, that's why you probably will have to assess the current situation, current risks, and choose the direction of trading that is more suitable for you. If this is normal distance for you, well, you could try watch for this level. If it's too much, then probably it's better to wait when the market will start move down, and if it will start down, and trying to catch some small retracements later. That's my common thoughts on the gold market. But in general, this situation and situation on the weekly, monthly time frames currently on the gold market is really threatening.